So 260 Brands is a new investment in Norfund, and we are very excited about this. We have very high expectations about what it can deliver. But one thing we have learned, and many others have learned, that invest in agriculture in Africa is that expectation management is a crucial skill. So optimism has gone to nervousness, have gone to distressed asset, has potentially gone to complete write-down. So that is the reason for focusing on the topic. Can a commercial investor make a lasting difference in African agriculture? Can we get a financial return? And that is also why we have with us a great panel. A panel consisting of people that not only work for organizations that are committed to this, but also have a strong personal interest and engagement in actually seeing agriculture succeed. So please come up on stage, Chris, Charlotte, and William, and I will introduce you. So, yeah, you can. So we have Charlotte Amanquah. You are the Regional Director for Commercial Banking for Anglophone West Africa, and that is Ecobank. So you have a long experience in banking. You have been in Ecobank, I believe, since 2012. And Ecobank, for your reference, is an investment that Norfund is indirectly invested in. So it's via a special banking investment vehicle we have called Arise. And we have, I believe it is 14% in Ecobank. Then we have Chris Isaac. So Chris Isaac, he has 20 years of experience in agriculture in Africa. You lived in Namibia, you lived in Mozambique. You are the Chief Investment Officer for AgDevCo, and you are also one of the founding fathers of AgDevCo. AgDevCo is a company or an investment vehicle in agriculture that was developed set up in 2009. And Norfund invested in January this year into AgDevCo, and we are very excited about that investment and that collaboration. And last but not least, our Regional Director in East Africa, William Nyaoke. You came to Norfund, it was in 2019. You have many years in IFC. You have worked across Africa. You've also been in the private equity business, so you also have a broad expertise to bring to this discussion. So with that panel in place, let's get started. So really the discussion here is, do we think that we can really make a lasting difference when we invest in agriculture in Africa? Hopefully we will end the discussion by a yes, but let's see. So Chris, starting off with you. So AgDevCo, 2009, still going strong. So has that been then kind of just a smooth sailing, or tell us a bit about the AgDevCo journey?
Sure. Well, first say I'm delighted to be here, especially as a Norfund investee. And I'd like to wish Norfund a very happy quarter-of-a-century birthday. AgDevCo's history, which is shorter than Norfund's, is in two parts, really. From 2009 until 2015, we made small investments in startup agriculture businesses in African countries. And we created a lot of impact, but we lost money. From 2015 until today, we've shifted the strategy slightly, and we now invest in more established local companies, still only in lower income and lower middle income countries in African agriculture. Now, investing small checks in startups, especially in agriculture, is really, really hard. And it's not only our experience, I think many investors have found this. It's very difficult to cover the transaction costs of doing the investment, the ongoing management costs of monitoring the investment, especially when they're located often in rural areas. And then you have inevitable losses in the portfolio. As you move to slightly larger investments, it gets a bit easier. When you're investing a few $1 million or so, the economics are friendlier if you are patient. And indeed, in AgDevCo's portfolio today, if we set aside our legacy portfolio, we are just about profitable. However, I think what's most interesting in this story is not really the financial returns, it's the development impact. When we were investing in startups, and we started in central Mozambique, we felt we were doing something heroic. We were doing things that no one else was doing. and perhaps there was a reason for that. But we saw businesses starting up, creating jobs, linking farmers to markets in areas where there were no formal employment opportunities. Yes, it's true that some of those startups failed, and if you look in terms of financial returns, we expect to recover around 70 cents on the dollar. But we saw that as a highly efficient use of the aid money that we were receiving at the time. I mean, in fact, if you compare it to traditional aid, where you get 0 pence back on the dollar, there's an argument to be made. But we did start to ask ourselves, is this really the way to maximize impact? Because the challenge with small investments is that many of them stay small. You may create islands of excellence that you can be very proud about, but are you really driving systemic change? And we wanted to show that we were contributing to development impact at scale, and we realized that to do that, we needed to work with companies that had been around a bit longer, had capable management teams who were able to take their businesses to a level where they were operating at a national or even regional level, and that explains the shift of strategy. And that's what we're doing today, whether it be in macadamia in Malawi, or alongside Norfund in avocados in Tanzania, or in fish farming in Kenya. So that move away from doing the very small investments with startups to where we are today perhaps reflects AgDevCo's sort of journey and how we've moved, I'd say, into middle age. We take a bit less risk these days, but we've got more experience, a few more grey hairs, and we'd like to think we're more effective in delivering that impact at scale.
Mm. So what I hear you saying is taking nearly more of a systemic approach in actually saying, let's see if we can shift a sector towards something that is really sustainable and can create some economies of scale. Okay, indeed. Thank you. So moving to you, Charlotte. So banks often have a bit bad reputation in agriculture because you're not really there for them. Certainly not there for the smallholder farmers. Not really willing to take the risk. Is this kind of, let's say, accusations that you recognize, and how do you think about that? And from Ecobank perspective, what's your approach to agriculture?
Thank you, Ellen. And yes, I do recognize those accusations because they come quite often. And it is true that in terms of the scope and the opportunity within the sector, as banks, we've been able to do relatively little. But for us in Ecobank, what excites us is how much that little does. Okay, and Chris talks about impact. So for us, the reason why we are optimistic, the reason why we continue to do what we do is because of how, whether directly or indirectly, we impact the entire value chain. Ecobank is in 33 countries. So we really tell everyone that our strategy is Africa, and we can't live it if we are not touching the sector. But for a bank like us, the point we look at is how do we play in the sector and safely, so that it's sustainable. And the key question we answer is, in achieving that impact, do we have a full understanding of the value chain? So today in Ecobank, we make a decision. If we are funding a tea factory in Kenya, we are supporting them with modernizing their factory. But do we understand how that client is getting the tea farmers to supply them tea? Do we understand how they will then fit into the East African tea trade market for export? Once we answer those questions, we are happy to go along. It's the same. I mean, there are countless examples in other countries. In Ghana, we look at even supporting an outgrower scheme, being sure about irrigation and the farmers so that the rice that is being grown would feed a factory before we put our money in the rice mill. So that's how we look at it.
Okay. Interesting. So value chain perspective. Could you just follow a question on that? So how do you work? Do you have like a set of selected partners that you bring on board every time, or are you kind of doing more tender processes, or how do you approach that partnership thinking?
Yeah, great question, Ellen. I would say I would approach it this way. At different levels of that value chain, we approach it differently. And there's a range of partners we deal with. So I'll give a few examples. At perhaps the top, at the anchor level, Okay, so there's a brewery or some other relatively multinational company that our corporate banking team is banking. At that level, we do partner with institutions that could, for example, guarantee some of our exposure. We share risk. When we come to the level of a processor or an aggregator, we are able to support them, yes, both in short term and long term, but other angles like the government or private sector insurance for the sector. So we look at partnering. We've done this in markets like Ghana with GESAL, Ghana Agricultural Insurance Pool, etc., to be sure that these partners also bring on board their expertise. We do the technical assistance training, to also understand, because we deal with money, but to play in the sector, there is that bit. So apart from direct primary production, at all levels where as a bank, we are working with our clients and partners, we use what is the best fit and ensure that the entire chain makes sense.
And just step to a follow-up question. What kind of ambition level do you have? Is it like, we should have 20%, towards the agriculture sector, and you really push like that? Or is it like, okay, we just need to think that every investment is solid? So how do you approach it? What kind of ambition level do you have in this space?
Yes, it's the latter. Because in those 33 countries, there are differences. In some countries, various initiatives in the economy, the structures, the infrastructure, the market for various commodities are there. And it's easier for us to increase how much we put in or invest in those economies as compared to others. But the advantage at the end of the day is that because of our spread, we pick on best practice from one part of the continent and see how it fits, and we improve, both for our team in the bank and for the clients that we deal with. So I would say that it varies, but the higher investments are in areas where we can clearly see the structure, and the environment is really enabling.
Thank you. So, William, to Norfund. You joined about 3 years back. I know you have kind of strong feelings for seeing that Africa can really build a strong agriculture sector. So, an open question, and a dangerous one maybe. What do you think about Norfund's approach to investments in agriculture sector? Are we on the right track?
That's really dangerous. I think what Ellen has said is I'm also one of those 80% small-scale, African small-scale farmers who cannot feed themselves with the produce from my farm, less than 2 acres of produce. And I think the way to respond to this question is we've had lessons, and we've been investing in agriculture for quite a long time. And I think if you look at our track record as an investor in agriculture in Africa, we've had cases where we've not done well, or some projects haven't gone as planned, but also there are cases where projects have gone well. And I think if I wear my investor's hat, and actually before that I tell you a story, I was watching a news today in the morning, BBC, and when I switched on the TV, the first news item was the first ship from Ukraine arrives in port of Djibouti with 23,000 metric tons of grains to go and feed people in Tigray. And I'm like, wow, these guys are actually at war, but we are depending on them to get grains to go and feed other people at war in Africa. I'm like, 63 million hectares of arable land in Africa uncultivated, there must be a problem somewhere. I think as an institution, as Norfund, what we've done can be seen, and I think we've gained some very invaluable lessons that we can take forward. And from my perspective, the way I look at our strategy going forward, we're taking a value chain approach, and I think that is the right way to go, but we should make sure that we are carrying all the parts of the value chain together, right? A few months ago, I was in north of Uganda, a place called Lira, where we went to look at prospecting for an opportunity, and these guys installed 100-ton-a-day processing facility for soya, and they were producing, edible oil, soya cake, and that kind of thing. And interestingly, everything they were producing was being sold as it is coming out of the process. Literally, the truck is there and it's going. There's no inventory. And when I asked these guys, why did you come all the way up here and how was the process and all that? And they told us that, We couldn't get an investor. This is a private company, zero investments from anyone like Norfund. And people are not producing soya here, but we did our analysis and we found that this place can grow soya. Our founders or our the owners decided, let's set up this thing and see how it goes, right? 3, 4, 5 years later, they had 20,000 smallholder farmers supplying soya to this facility, and they were looking for money to expand 6 times. And here's Norfund showing up. We can give you that money. And they didn't talk to us again. I think one of the reasons when I followed up was, other investors were now available. And, on the side, the CFO told us, William, if I brought this to you 4 years ago when we only had a feasibility study, would you have looked at it? And the answer probably was, no, right? So I think people are taking risk. There's a notion that investing in agriculture in Africa has lost money, but also, I believe, there are people who have invested in agriculture in Africa and they're making money. 2 things. One is patience. You need to stay long. And secondly is scale. I just look at the numbers today. An average farm in Ukraine is 300,000 hectares. A small farm in Ukraine is 1,000 hectares. An average farm in Kenya is maybe 5 acres. And a small farm is less than 2 hectares. You need scale to make agriculture work. There's land in Africa. We need to get the right partners. But I think we need to have a value chain approach and face the problem with solutions that can work.
Good, thank you. So I hear some connections here in your thinking and your approach. And you mentioned one thing, and that is scale. And another thing we also touched upon when we spoke, Charlotte, was what you call mechanization. And that is a requirement. Could you talk a bit to that?
Yes, that is true. So over the years we've learned, and William talks about it, making that decision on supporting a farm would be dependent on how we are reasonably certain of output. So I'll give an example. Today, we may not give money for a small farmer to grow a crop, but for a larger scale farm where there is clarity on how the produce will be used, key questions regarding how much of a dependence is there on rain versus whether there is an irrigation system in place. How much of a knowledge or an ability to acquire additional understanding, even in the types of seeds that are used. That early stage research and understanding, the technical knowledge, the decisions around pesticide application, and the structure, the governance in that entity regarding some of these decisions. And it doesn't always have to be a very large-scale farm, because the reality is that in many of our markets, we have relatively smaller-sized clients that are doing this, but in a structured way. The good thing is that, to a large extent, it assures both the client and the bank of what the outcome will be with that investment. And that's the key way we look at it.
Thank you. And so technology, and also then moving more maybe into the words kind of digital technologies, is often kind of lifted as the game changer in African agriculture. Chris, you were quite blunt in saying, I don't believe in that. So we had Jan Egeland saying that, we have a new generation coming. They are, the email phone, the tech savvy. But you don't really think it's that easy in the agriculture space?
Well, I'll use an analogy. Eliud Kipchoge, the fastest man on the planet at the marathon, broke the 2-hour record, which is an incredible achievement. Now, some would say he was able to do that because he was wearing the new Nike Vaporfly trainers, technology that's been introduced in the last few years and made that crucial difference to cutting off a few minutes, seconds off his time. But Eliud Kipchoge didn't become the fastest man at the marathon because of trainers, and the worry is that if we see technology as the answer to all our problems, you don't put in the hard work, fix the fundamentals of the agriculture sector that have to be in place before technology really has much value. We see probably a business plan a week for some mobile app. But unless the infrastructure is there to collect the crop and store it efficiently, unless you can reach markets, unless you have strong management, the app is next to useless. So yes, technology is a really important enhancer. we've seen in Kenya how M-Pesa has been a game changer in many respects, but in agriculture, you've got to get the basics right. And our worry is the talk about technology is a distraction from fixing the plumbing.
How do you look at that? Have you seen the same thing, William, when you've been, from your experience?
I mean, I see it in Nairobi. You can imagine how many apps we see. And just going back to that M-Pesa example, the beauty is M-Pesa. We all have M-Pesa app in our phones, but it won't just bring money to your wallet, right? So you have to go and make the money for it to come to your wallet or someone transfer it to you. So I think, and that's the hard work that Chris is talking about. For me, at the end of the day, someone has to go to the farm, right? And someone has to drive the tractor, and someone has to, have a silo that can store this, produce and get it to market. That work has to be done. What an app or technology helps you to do is maybe to organize and become more efficient and give you more information and, make the interaction much easier. But the hard work has to be done.
It's the icing of the cake, not the cake.
It's an enabler. Right, in an enabler to make work easier, to make you probably more agile and reach a wider market, but the produce has to be produced, it has to be processed, and it has to be taken to market. I think what I wanted to say is, I like using examples. In our flow in Nairobi, we have a neighborhood which is Hello Tractors, which is an Uber for tractors. And when these guys started this thing, it was a brilliant idea. There's no mechanization in Africa. If you mechanize your farms, your produce increases by 40%. And it was a brilliant idea, and it is still a brilliant idea. But what he has done now is realize that you have this app, maybe a few farmers sign up to it, but most farmers don't have tractors. So you have to enable them to buy tractors to put on your platform. So and then he looks for financing for someone who can finance those tractors. Then he has tractors on his platform, but then he realizes actually, these people need irrigation because even if they plow and there's no rain, then they will not produce. Then you have to find someone to. So I think the point I'm trying to make is, yes, technology is necessary and there's a place for it, but we have to realize that the systemic issues that make farming in agriculture in Africa so inefficient still have to be fixed. Technology may be fixed part of it, but other things have to come to play.
I understand. You had a comment as well?
Yes, I just wanted to say that even from the banking aspect, yes, I agree it's an enabler. And there are a few interesting examples, whether on a smaller scale or larger. So, for example, we have a partner, AGRA, the Alliance for Green Revolution in Africa, supporting Ecobank and funding the use of very basic phones. 300 youths in farming, giving that and enabling them to receive payments, which enables them acquire input. So yes, it won't solve everything, but sometimes in very small but deliberate ways, that intervention helps to achieve the bigger objective.
Good. I see time is running very fast, but there is one topic I just wanted to touch upon. I think it's quite obvious, and that's climate change. So can we make a real change with our investments? And then you have climate change coming in and making everything much more unpredictable. So what's your take on that? What can we do as investors in agriculture sector to help out on this, to help adapt and be more resilient to these changes?
Right. I think, obviously, on different skills, as I always talk about. So I'll share some of the things from the Ecobank group. As a bank, directly, within our operations, we are more conscientized on what sustainability means. So, for example, in terms of 2 projects, we would prioritize one where we can help the client fund it such that we are giving priority to climate change impact. But on a larger or strategic level, I'm sure that you've heard this, that last year, Ecobank was the first African bank to raise a sustainability bond, 350 million. And at the end of the day, the question is, how do we deploy that? So there are a number of interventions that have helped. We've been able to support cocoa growing communities where I come from to deploy streetlights, 40,000 of them. In the local affiliates, different countries, we are increasingly looking at how do we put ourselves forward. So on the Green Climate Fund in Ghana, we are there. We are an accredited entity. But all said and done, in each discussion, the reason why this is forefront is we are asking the question, how do we help the client progressively? And it's a journey. How do we help this client to appreciate the advantages in looking at their operations more sustainably and paying attention to climate change issues?
Thank you. Chris?
Well, 2 quick points. Firstly, companies that engage with a large network of smallholder farmers, and these are often the companies that are supplying the inputs on credit and being the guaranteed market, as in the example we just saw. They can promote conservation farming methods. That makes a big difference. They can provide improved seeds that are perhaps more drought tolerant. That makes an important difference. But it won't be the game changer that William's looking for in terms of food security. And if that's the goal, you cannot avoid irrigation, and irrigation at some scale. Now, of course, there are places where irrigation is not right, not sustainable, but there are plenty of places where irrigation done sustainably is a way of capturing surplus water and feeding a nation, and we need to find a way of investing more in irrigation.
Any add-ons from you on that, William?
Yes, so actually I have 2 points. One is there's resilience and there's mitigation, right? And you know, these statistics, I don't know whether they're right, but food waste is one of the highest emitters, maybe number 3, if I'm not wrong. And most of that food waste is actually food that can be used to feed people who are hungry in Africa. You know, I mentioned yesterday that 37% of all food produced in the world is actually wasted. Now, I think investment should be very targeted and very intentional, right? And for instance, in Africa, we should look for how do we invest in interventions that reduce food waste, for instance. I think that's a climate change investment, right? Another example is irrigation, but also things around mechanization and use of fertilizer in a good way so that you use the same amount of land, but because you're mechanized and you're using the right seeds and the right fertilizer, your output actually goes up maybe twice. I mean, wheat productivity in Africa is average 2.5 tons per hectare. In Ukraine is 3.7 and US is 4.5. Is the soil different? I don't think so. It's just how they do it, right? So I think we need to invest on the right ways of doing things and be very interventional. We used to call it in IFC transformational. I don't want to use that word, but you can borrow it.
Yeah. Good. Thank you. So time is running up. I think there's some good points that come. I like the idea of having a kind of a systemic approach to specific sectors, where you can really create some excellence and really get some economies of scale. The value chain approach is crucial, and in having a value chain approach, what is key, it's about people, it's about communication, it's about building trust, and then also what you mentioned, William, it's about patience, it's about taking the time. And with that, I just want to end with a very short story from, I was in Mali talking to a partner there, and we were discussing about price and this and that, and he said, but you know, Ellen, you guys, you have money, we have time. So patience is certainly important. So thank you very much to the panelists, and thank you all to the audience.